Hello everyone, hi, welcome to the channel of Wall Street Mojo.
Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon.
Friends, today we are going to learn a tutorial on IFRS versus US GAAP, an ongoing discussion and it's never ending. See, before we differentiate between IFRS and US GAAP, it's important to understand their meaning and the context in which these two terms are used. Wait a minute, are they not set of accounting standard? No, not exactly. US GAAP and IFRS are technically classified as generally accepted accounting principles, which in the financial and accounting world is commonly known as GAAP. So in this tutorial, we are going to learn a couple of things. We'll start with what is exactly GAAP. The first question, what is GAAP? See, GAAP are broad framework or the structure which is used to prepare financial statement of the company. Like, have you heard about Java, C++, or HTML are used by the software engineers to write computer programs? In the same manner, accountants all over the world use a language that is known as GAAP to prepare the financial statement. But there is one huge difference between the computer language and GAAP. Unlike a programmer who uses the same language irrespective of whether he is sitting in Silicon Valley or Shanghai, an accountant will use the different reporting language in different jurisdiction because every country has different GAAP. Every country has different GAAP. Like for example, account in India is used in India. It is IGAP. It is known as IGAP. Generally accepted accounting principles in India. The one sitting in United States, that is US, they use what? US GAAP. And it is known as generally accepted accounting principles in US. And there is one in UK, which is known as UK GAAP, which is used in preparation of the financial statement or the books of accounts. So the one question arises that why, this is just an example, and the other countries use IFRS in general. So I'll write for others over here. So why they use different GAAP? See, why accountant in different jurisdiction uses different reporting language or GAAP? Well, different GAAP are used because every country is governed by different set of very important laws. Though various laws, you can say that income tax act, companies act sounds similar, but they vary in a great detail amongst each other. Criminal law that is applicable in UK and US may sound similar, but in its section, provisions and clauses and sub-clauses vary in a great detail between them. Differences arises because of the diversity in language, ethnicity, culture, and above all the customs and practices. Hence, to accommodate all this, there arises the need to have a different set of laws in different countries. And this is also applicable for the business and financial acts as a business environment and practices also vary greatly between the nations. Hence, various countries follow its own reporting language or GAAPs like IGAP, US GAAP, UK GAAP, and so on and so forth. So we have learned why. Now I want to make you understand the impact of difference in the GAAP. Imagine you yourself to be a, let's say you consider that you are a private equity hedge fund manager, or sorry, you're a private equity fund manager having millions in the coffers to invest. So what would you like to do first before investing? Well, there could be many answers to this question, but most of you would definitely agree with me that you would like to have a look at the financial health, which is known as the balance sheet and profit and loss account of those companies. So after searching through many good companies, you finally came across newly established company, let's say Pineapple Inc. And that's a new company for you. Pineapple Inc. sells smartphones. And in order to capture the existing market in the emerging countries like India, it sells its products at a discount. Let's assume Pineapple sells smartphones at a cash discount of, let's say, 20%. So for simplicity, let's also assume that it has sold close enough to 50,000 phones annually in both India and US, whose market price is, let's say, close enough to $125. So how much you expect the recorded revenue in the books of accounts of the Pineapple Inc. in its holding company in US and subsidiary in India? Well, one would think that close enough to $5 lakh or $5 million is the revenue earned by the company in both US and India. So the discounted price equals to 125 is a share price, and if you deduct 20%, from that, what do you get? $100. Okay, so 50,000 into 100 will give you 5 million. So you are right in pointing out that the company earned $5 million in US and India, but revenue recorded in the books of account will be different in US and India. I'll just write for you over here. In US, what will happen? A company Pineapple revenue will be recorded at $5 million. But in India, what will happen? That Indian subsidiary of Pineapple revenue will be recorded at $6.25 million. That is 50,000 into 125. Well, that's a huge difference, as you can see. 6.25 and 5 is a huge difference. That is 1.25. It's a huge difference, but it's not because of the accountant in US are smarter than that counterparts in India. It's because of the different GAAP being followed by the two countries. Now, as per the US GAAP, revenue is measured as per the fair value of the economic benefits, which in simple term means that net discount and rebates, while IGAAP, that is in India, is measured at the gross value of the economic benefits, that is inclusive of the cash discounts. Let's look at how the financial statement in the two different countries, in basically the two different countries will look alike. Let's see, the first is US subsidiary. So, in case of US subsidiary, the revenue from the operation will be shown as 5 million. So, net profit will be also be 5 million. But in India case, what will happen? The revenue from the operation is 6.25 million, right? And the expenses that will be deducted, that is the cash discounts, will be 1.25 million, which will give you your net profit as 5 million. Now, you need to note that though the net profit in both the cases are equal, 5 million over here and 5 million over here, they both are same, right? But the top line, the figure analyzed by the analyst, is different by huge of 1.25 million as we analyzed. So if one were given the option to invest in one of the two companies, he would definitely like to invest in the Indian subsidiary despite the fundamentals in both the companies remaining the same. Also, it's important to understand that though there are huge differences between different GAAP, but there are also various points of convergence. So let's have a look at finally the difference between IFRS and US GAAP. See, under IFRS, inventory is valued at FIFO basis, and under IFRS, the inventory cannot be valued on LIFO. However, inventory can be valued at FIFO, right? First in, first out basis. But in US GAAP, it is LIFO method that has been used. Inventory is measured at lower at cost or NRV. But over here, inventory is measured at lower at cost or the market value. If we see in terms of depreciation, IFRS follows the component approach for the depreciation. That is, assets belong to the same component. In US GAAP, it does not mandate. There is no compulsory thing, or there is no compulsory approach for the calculation of depreciation. The same case goes with the revenue. IFRS rules for revenue recognition is general in nature, universal and equally applied to every company. In US GAAP, for revenue recognition are industry specific. Like in manufacturing, real estate, oil, gas, it contains a separate set of rules and regulation. In case of intangible, internally incurred development cost can be capitalized. That is, the research cost, internally incurred development cost can be capitalized. But over here in US GAAP, internally incurred development costs are not allowed to be capitalized. So after all of this, we can make some final conclusion out of this, that there is differences that have been highlighted above and are just the tip of the iceberg, and there are far more other differences between IFRS and US GAAP. These are far too technical, depends upon the facts and the circumstances of the transaction. Differences in each principle may require an entire separate write-up, but it is important to understand the broad principle on which they differ. US GAAP, as highlighted above, is a rule-based accounting principle, whereas the IFRS is principle basis or universal in nature. And it's also important to point out that US is stated that it would adopt convergence-based principle in adopting the broad principle of IFRS in near future. So this differences have a huge impact on some of the businesses and the economic decisions like M&A and capital raising, foreign direct investments, and etc. will depend upon the same.
So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.